Hello, hello. Oh my goodness, look at these familiar faces. It's so great to see you. Terry, Doug, Terry. Now, okay, you're having a race of who gets in the room first. I love it. It's so awesome. That's so great. Anita, great to see you. Mark, Duncan, and Leanne. It feels like it's been a little while since I've seen your lovely names out here, so that's fantastic. All right. And I think we are just gonna get started. Okay, well, welcome everyone. As you know, I am Jennifer Hunt with the Real Estate Wealth Lab. I'm the Chief Intelligence Officer, and I'm really excited for today. One of the reasons I'm excited today is because we're gonna be starting with, okay, you guys have heard me talk about the democratization of real estate, co-ownership, and ways of being able to be in real estate without having to do all of the heavy lifting yourself and on your own shoulders. Well, today is another example of that. And I have been looking into a bunch of things lately. And I know our special guests are going to be talking about this, so I won't give up too much of it. But it's easier than you think, and it's available for more people than you think. And that means that real estate investing is even more democratized than ever before. We're going to be sharing that a bit today. So I'm pretty excited. So I'm going to just share my screen for a moment. And I think I've got the right screen up. Yes, we're here. All right. So you are at your Market Leaders Lab with the Real Estate Wealth Lab, and I will introduce them in a little bit. I'm going to tell you a little bit about REWL, but very briefly. So we've got Shoaib Gaia coming on, who is a manager and investor in relations at District 3. There he is, sorry, District Property Trust, and he's waving. Got distracted by his wave, and then there you go. And then we've got Mon Ha, and he's the Chief Executive Officer at Fund Scraper Capital Group. And so we're going to get into an amazing interview with them in just a moment. First, bear with me. I've got to tell you about some housekeeping items. And actually, I'm not going to go there just yet. I am going to. One moment. I apologize for the delay. I was changing out slides right before we got on here. All the last minute things that we sometimes have to do. So bear with me. Thanks for your patience. And oh, okay. All right. So a bit about REWL, you can connect with us. We've got next level advisors. And as you know, this is just a little taste of the team. There's so many more individuals at the Real Estate Wealth Lab, and we all have different expertises that you can lean on us and support you along your way. And you can follow us on Instagram. We all post about different things. I post a little bit about research and a lot about vacation rentals and vacation ownership. So if that's something that you like, follow me. Now, what we're going to do is we are going to be going to the Real Estate Wealth Lab portal and products about what members get. But I am not going to do that right now. We have special guests at the very end of this. Ken, our Chief Operations Officer, is going to be going through that. And so I encourage you to stick around until the end. Now, that's for whether you're not a member, and even for those of you who are members. If you are already a member, you might want to stick around and get reacquainted with all of the benefits that are continually growing with the Real Estate Wealth Lab. But before we go there, I do want to make sure that you are reminded of the next upcoming events. So basically, we hang out every week. Same bat channel, same time on Wednesdays. And we've got our Market Leaders Labs. We've got our Community Lab events, which are now masterminds for the next 4 months. Or I guess it's now 3.5 months. And we'll be doing that. And then, of course, the Research Lab as well. So these are the next dates that you can come and join us, and we'd love to have you. And then once a month, we have our casual REWL lounge on Fridays. So the next one is October 21st, and you can come with a cocktail or a tea or whatever you like. And we hang out on Zoom together very casually. And as I mentioned, the masterminds, these are brand new. We've got 3 cohort intakes right now: property management, life by design / international real estate investing, and multifamily. So please come on out to those. Your next community lab is October 19th. That's next Wednesday. Your next research lab is October 26th, so in 2 weeks. And I'll tell you, I said, what city market would you like for our city specific market analysis? So please feel free at any time that you may send in your requests. And ladies and gentlemen, next one will be on Burnaby, British Columbia. And yes, that is an incredible location to be investing in, and we're going to tell you why. And I know there's a bunch of you who are neighbors to that, right, Terry? You're really close. It's just, you can almost throw across the pond there that are inlet. Okay, so we'll be excited for that. And let's see. Okay, I think that's everything. We're gonna go through the special promotion at the end, but if you were really quick, you can scan that now. And that's how to get in touch with us, is at info@realestatewealthlab.com. And today we will be talking to our friends here at District REIT. I'll talk about it properly in a moment. Just so you know, this is the way to connect with them. Go to realestatewealthlab.com/pro-network. And that's how you can get in touch with them. We will be putting it in the chat throughout today, so you'll be able to connect with them that way. So now into the fun stuff, you know, about the disclaimers. So this is our Real Estate Wealth Lab disclaimer. And essentially that we are not providing investment advice in any way, shape, or form. We are providing information, but you must do your own diligence, of course, all the standard things. And likewise, District Property Trust also has a legal disclaimer, and their legal disclaimer is right here, so you can refer to it. And again, as you know, this is just making sure that we're doing our diligence and having you do yours. All right, so I already sort of partially introduced them, but we're going to get into it now. If you don't mind, we'll spotlight Shoaib and Lon. And okay, Lon, right on, excellent. So I'm just going to leave this up for a second. So Shoaib, you are with the District Property Trust, and Lon, you are with Fund Scraper Capital, and we will be talking about your relationship and how we have two of you on today's call. So I'd like to just, I'm going to stop sharing my screen so that we're a lot bigger, and we're just going to have a cool, fun conversation. So why don't, Shoaib, you begin and share with us a little bit about you and how you got started.
Yeah, of course. Well, first off, thank you very much, Jennifer, for having me here today. Obviously, it's a pleasure being here and speaking to all you lovely investors a little bit more about District REIT and what we do. So I got started with District REIT about 2 years ago. I come from the financial services industry. I've been working in financial services for over 8 years now. So that leads with commercial lending, private equity, also real estate, and just working with investments with retail investors and even institutional investors. So I've been in the industry for quite some time. I started with District REIT, I should say, a couple years back. And
I thought you were gonna say you actually started it and it was yours. Well, anyway, hey, Carmen.
I honestly wish that was the case, but then I got introduced to Carmen, who actually showed me what a REIT is and how it works. And basically coming into a private REIT, that's when I got introduced to District and what they do and how it's so unique and different. And that's when Carmen really brought me on to help manage the investor relations side of the business, and helping with capital raising, closings, filings, and making sure that everything that comes from investor relations is handled adequately, and we can grow, and where to target and where to put our funds and how to lead the business and grow further.
Awesome. Very, very cool. And Lon, tell us a little bit about yourself.
Thank you. I am Lon Ha, founder, CEO of Fund Scraper Capital Inc. We are a digital first technology exempt market dealer. And as you guys are probably aware, investing in private real estate and private securities or exempt securities such as District REIT is highly regulated. And so that's the primary reason why I'm on this call. Anyone who's interested in moving forward with the investment, we're there to make sure that we walk you through the investment process. We hope to make sure that you understand the risk and the rewards of investing, because it's such a highly regulated process. So we're there to hold your hand, walk you through any questions you have. And because we're digital first, we do it primarily online. But if there's anyone who wants to meet in person or have at the meetings at the office, more than happy to facilitate that, because our main objective is to make sure you're comfortable with understanding the investment offering. And we'll be there to guide you through, and we try to make it as streamlined as possible, where it's primarily all through the online platform. And so I'm here to make sure you're covered off in terms of understanding the risk and returns, because it's so highly regulated.
Awesome. And thank you for that, Lon. And another way for those of you who are tuning in and maybe going, what is this? What is this relationship all about? And highly regulated and feeling a little nervous about it. So it's Lon's job to make sure that everything is easy for you to understand and that you know what's going on. That's what he's here for. So that's awesome. And Shoaib is here to showcase what it is that the district REIT does. So another way that I've recently heard this described, and I think it really helps me understand, and hopefully it will too for you folks up there too. Okay, so if you're buying a single family home, let's just say that, or a piece of property, you have a realtor. Yes, most of the times, right? And that realtor works on your behalf and makes sure that you know all the due diligence, not necessarily due diligence, but like some of it, maybe recommending the inspection and getting all the paperwork handled. Well, very much the exempt market dealer, the fund scraper capitals of the world, the lawns of the world, really almost act as a real estate agent for larger deals. That's kind of larger real estate deals. It's a very simplified way of explaining it, but hopefully that helps. So would you agree, Lon and Shoaib? Does that capture it a little bit?
Interesting metaphor to explain, yeah. But yeah, we're there in between the issuer and the investor, because sometimes you need that independent guidance and discussion. And so we're there to have the sometimes easy conversations, sometimes tough conversations. But also the offering, even though, as Jennifer mentioned, there's a democratization of the ownership of real estate through investing in private vehicles such as this. Not everyone should be investing, and not everyone is qualified to invest sometimes. And so we're there to make sure, kind of like a gatekeeper, to make sure anyone who should be participating or should not be participating isn't able to participate. And those who do qualify to invest, then they can proceed to move forward and evaluate the offering.
I'm so glad you brought that up, because that's actually where I wanted to start today's conversation. So we are actually going to start with, okay, so great. So you're playing this gatekeeper kind of role, and you want to make sure that it's right for the client and that the client is in the right investments for them. So this is cool. However, there's a misnomer, I don't know if it's maybe a misnomer, a misconception, I think, out there that, these eligibility criteria in terms of accreditation and eligibility and all the different levels, that it feels like, quite frankly, oh my gosh, only these things are for already rich folks. And what I would like to express to everyone today, and again, I am not a professional in this regard, but my understanding is that you can actually get in at just $10,000, and if you just have that amount and stay at that, it's very democratized, and almost anyone can invest in almost anything. Is that accurate?
Yeah, just to give some context on the eligibility criteria, prior to 2016, prior to new rules being passed that allowed and opened up the doors for pretty much almost all investors to participate, it was really only for private equity funds, institutional investors, accredited investors, using and relying on various exemptions that weren't available to the regular everyday investor. And so post 2016, when the offering memorandum exemption was passed, that created a whole subcategories and subsegments of investors who can participate, and they're driven by various financial criteria. So depending on what your current financial circumstances are and your investor accreditation level, then there are potential limits on how much you can participate in the exempt market. If someone is only investing in $10,000 and they're relying on the offering memorandum exemption, then that's how much they can invest in 1 year if they are what's called an ineligible investor. That's one category of investors. That's probably the broadest category.
I think that, sorry to interrupt, Lon, but I just think that that's fantastic, is because we rarely talk about the ineligible person in an investor. And in fact, ineligible just means that it's a very reduced amount, down to 10,000, but you can actually get in.
Yeah. Yeah. So that is the broadest category, but there are significant limits on how much you can participate. It's $10,000 in any 12-month period, assuming obviously it's suitable. The second class of investors that was created post 2016 rule changes is what's called the eligible investor. And so to qualify as an eligible investor, there's various net assets and financial income, annual income criteria. But generally speaking, you can invest up to $30,000 per year with potential of going up to $100,000 in any 12-month period. So it is a significant amount of money that you can invest as an eligible investor, and that would be the second most broad category. And then, of course, there's the third category, which is the accredited investor. These are typically individuals with north of $1 million in net financial assets or have earned greater than $200,000 individually for the past 2 years and projected this year going forward. So that third category of the typical individual investor, there are no investment limits for that third category investors. So ineligible investor, eligible investor, and then accredited investor. And there's strict limits, medium level limits, and then no limits.
Awesome. And I think that they should change ineligible to actually eligible, but just at a reduced capacity, because that means a lot more people. So there we go. So now that we know that this is a really awesome opportunity, but something that people can consider, and it's far more easy to get into REITs or funds, etc., than one might have thought, because everyone's always talking about the accredited investor. All right. So now that we know that, now let's learn a little bit about, and we'll talk more at the end on how people can participate and all of that, but let's understand what district REIT is, or I should say the district property trust, and then you can tell me more about it, Shoaib. So how long, let's get right to the nuggets here in terms of like, how long have you been in business? How did this all come about? Tell us the story.
Yeah, of course. So District REIT is actually, so it's a private real estate investment trust, and that's what it stands for. So Carmen and Richard, who are the principal and trustees and founders of District Property Trust, they are knowledgeable, very experienced individuals in the real estate industry themselves. They introduced this product about 5 years ago now. So it's actually going to be, our first initial closing was February of 2018. So quickly, it's become almost 5 years. And at this point, we are obviously continuing to grow this product. This product was an open-ended product that was introduced 5 years back to allow it to continue to grow, and we can get more and more investors as a part of the product. And really, when Carmen and Richard brought this on, it actually touches on what you and Lon were mentioning earlier about ineligible investors. They really wanted to allow every kind of investor to invest in this product. And that's one of the reasons why the investment limit, the minimum investment limit, was set at $10,000. They also saw it as an opportunity where many of our investors that are a part of our One Real Estate Enterprise, which is our affiliated group of companies, if they're invested in something else, allowing this investment of District Property Trust to come about really acts as another option for people to diversify, put their money in something else other than just one area of the investment world. And that's really what the idea was, and allowing District REIT to come in and act as another investment vehicle for people that are investing in the private space and are used to the private space, but don't just want to be heavily concentrated in one area. So that's really where Carmen and Richard wanted to establish another investment like this.
That's awesome, Shoaib. And just to put in a little personal comment there with regard to Carmen, I haven't met Richard, but Carmen for certain. I've been working with her for, I don't even want to say how many years, but over a decade. And, I really value, she's definitely, and the whole team at Pro Funds and at Valor and the whole, we'll talk about that. It's just really, really high levels of trust and integrity. And so, of course, she would create something that helps other people and helps solve issues. In fact, if you wouldn't mind maybe touching on, if I understand correctly, that some of the investors or folks who are already in some of her other projects actually asked for this?
Yeah, so one of the main reasons why Carmen really wanted to start this was also an investor demand. Honestly, many investors wanted Carmen's experience in the REIT world, and they wanted to understand how to invest in private REITs, and where they wanted Carmen to introduce another product that allows us to invest in maybe a different style of strategy, because ProFunds was focusing mainly on private mortgages and syndicated mortgages. This allows them to then invest and put their money elsewhere. And yes, it was definitely asked. And actually, going back to what you were mentioning about Carmen, she has been in the industry for so long, and many people have now, it's like everybody knows her. No matter where you go in the real estate world, they know who Carmen Campanero is. They know, 30 Minutes to Wealth, which is her show, which is in 4 seasons. I think the 4th season is completing now. At this point, we have the different affiliated group of companies. So really at this point, with the amount of experience she has and the following of different investors that have been really by Carmen's side throughout her entire journey in her career, they also wanted to be a part of something like District REIT, and that's why it was a success from the moment she launched it.
That's actually a great. I'm going to take a moment to sort of expand on that. When you're thinking about, so our lovely members and folks out there, if you're thinking about doing it yourself and actually starting a REIT, you're going to want to listen to this next section really closely in a second, but you'll want to also consider your reputation and doing it right and having a solid reputation and being in business for 30, I won't say the number of years of experience that comes with it, maybe combined experience, there you go. A lot of years of having great experience. This actually is what helps you create that so you can be successful at creating your own fund and your own REIT. Now, for those of you who don't do it yourselfers, who are not interested in creating your fund, that's great too, because you're going to be wanting to look for individuals who are running these and starting these, who have experience and who have expertise and who have been around the block and seen the problems and solved the problems effectively and consistently. So that's excellent. So Shoaib, I'm going to go into a little bit more about the whole, all these companies working together in this sort of symbiotic relationship that support each other and support investors. And I think for those of you who are do-it-yourselfers and want to start a fund, you'll want to pay attention to this in particular. So share with us a little bit about the structure.
Yeah, of course. So one of the key advantages that District Property Trust offers is how vertically integrated we are as a REIT from some of our competitors and other REITs that are in the industry. And what I mean by vertical integration is that we have everything from top down within our own affiliated group of companies. So the one real estate enterprise, what that encompasses is all our affiliated group of companies. So where that comes from, private lending, construction, our REIT itself, our equity LP investments, pretty much everything that we need to run and operate a REIT, we can actually find ourselves within our affiliated group of companies. So we have also built a network with certain financial institutions. We have real estate agents that we work with and brokerages that we often work with. So having that really extended relationship with so many different vendors in the industry, that's allowed us to have this strategy that when District REIT was developed, we are often not only private lending and acquiring pieces of land, we're now constructing on them, we're building these projects out. And once they're complete, if it makes sense for District REIT to go out and purchase it, we can actually go out and purchase this property without having the fear of competing with somebody else in the market. We don't have to go in bidding wars. We don't have to outbid another client or somebody else that wants this exact same property. If it makes sense for District REIT and it's good for the investors on both the equity LP investment side of it, then we can make that offer and we can get that property for District REIT. And honestly, it doesn't mean that it's going to be every property that we develop is going to come in to District REIT, because it really needs to make sense for both the investors and for the company itself. but at least we have that option always. And that's really part of the strategy that Carmen and Richard really wanted, that we can always go out and purchase our own properties if we needed to.
So
Yeah.
do you hear that machine, right? Like that is a really top pro tip, everyone out there.
Yeah.
100%. Where, okay, so you're building, you're developing, or you're repositioning various projects, and as suitable ones that come into, which we're going to talk about your criteria for which ones you would select in a moment, but
Yeah.
ones that you're, that actually do fit that mold. Now there's the fund, the trust, the REIT that can then purchase and acquire them and include those in this longer term investment. So you've got sort of a more shorter term potentially investments with the projects that you do your value add, and then you do your all the things, or refinance or develop, and then you bring it out and you have an opportunity for a long term hold through the REIT. Is that correct?
Yeah, it's definitely correct. And there's actually another element to this strategy that we can touch on in a little bit, but it would be the mortgage allocation asset side of district REIT. So district REIT right now, it earns majority of its revenue from rental income. Now, part of that is we have allocation room for mortgage lending as a part of the portfolio. We have up to 40% of its portfolio that we can utilize in mortgage lending. Doesn't mean that we're going to utilize the entire bit, but the cool thing is that we can now utilize this aspect of the portfolio and go out and lend a mortgage to let's say one of the projects in our affiliated group of companies like Valor, and we are now lending that mortgage. We're earning revenue off of it. And now once it's complete, we can actually utilize that portion of the mortgage to go out and acquire the property. So let me put it into simple math for you. So let's say
totally know this. Okay, this is good. Great.
This is good. So we have, let's say, a $10 million property. We lent $3 million to this property as a mortgage. Now it comes time that it's done, it's complete. We can want to go purchase it. Rather than paying 10 on it, we're going to pay 7. But all this entire time while it was being developed, we were actually earning revenue off of that said property. So it actually ends up being another element to the strategy that is brilliantly put together, where we can actually utilize the fund itself and then purchase it back in ourselves.
And that is a beautiful way, ladies. Like that's another top pro tip. And you can use that. This sounds very sophisticated because we're talking about REITs and mortgages at the more institutional level, if you will. But you can also do something similar for your joint venture partners. So for example, like you could get a lender to lend you, a private lending acquisition. And then at the end of the term, you can develop the math so that it's actually enough for them to have a subscription to an option to purchase in. And so it's a reduced rate, or it matches the amount that they need for earning equity. So you actually help them help you, and then it just creates the next cycle. Is that a fair, accurate assumption of how this works?
Yeah, definitely. I think that's perfectly put.
Awesome. Okay, very cool. And then actually on that side though, and I thought this is where we're going to go with it, but also just, do you want to talk a little bit about how does ProFund's mortgage then also kind of play into this group of companies?
Not necessarily, not always, because we obviously in the industry, we have developed an extensive relationship with financial institutions. So we do work with a lot of lenders that we need to utilize every time we make acquisitions. So it's not necessarily always the case that we would be using ProFunds. It sort of depends on a case-by-case situation where we would utilize them or not.
Okay. All right. Well, just so you know, ladies and gentlemen, that's another one. That's their mortgage company. And so that it gives them some options for getting funding, which is always great. Okay. Anything else on that before we move into some of your acquisition strategies?
No, not.
Okay.
Not really.
All right. So tell us about how you grow. What's your gig?
Okay, so basically we really want to look at what's a good fit for our portfolio right now. We're not tied down to one particular area. We're not one area focused type of REIT. We'll focus on residential, we'll focus on retail, we'll focus on commercial and industrial. We sort of want to anything that is a good property add to our portfolio that is an income producing property, we will add that to our portfolio. Now that, it has to make sense. It has to make sense for the investors, but we're not focusing on just apartment buildings or just focusing on residential. And that allows us to be very flexible. It allows us to be very versatile in the industry, where sometimes it's a good opportunity in, I don't know, Owen Sound, Ontario versus, London, Ontario versus Milton, Ontario. So what we've done is that right now you're obviously going to be thinking about why these are all properties in Ontario, but that is one of the strategies that we utilize quite heavily when we're acquiring properties. And the main reason for that is because we've developed a lot of connections in the industry, and it's also easier when we have a larger footprint in a certain area. So for example, right now we have multiple properties in London, Ontario right now. If we go and look at more properties there, we can utilize the same cleaning staff, we can utilize the same vendors to get financing, the same vendors to do superintendents or property management. A lot of these things can be utilized and actually end up saving us costs, while also understanding that we have a good, trustworthy rapport in that area and that with the people of that city. So we're often looking at looking at properties within Southern Ontario. It's also in our backyard. We're just outside of the Greater Toronto area ourselves. Our head office is in Burlington, Ontario. So it's just easier for us to get out there. Also, you look at any properties that are really a good value add, and then we can go ahead and make our analysis right there and then, rather than expanding out to Western.
Yeah, it might be good to mention about the REIT's diversification strategy, because you also have a strategy where you're acquiring different types of asset classes. So let's just say the cycle doesn't always go in one direction. If residential rental rates are going up, then that residential asset class component of your portfolio will benefit. You guys recently did an acquisition in industrial. You guys also have medical office and commercial. So I think it's part of your diversification strategy. Can you speak to some of the diversification benefits, and meanwhile staying local within the markets that you guys have local market expertise in?
Yeah, of course. So part of the strategy of diversifying is that we're not overly concentrated in one area. So, we saw this
One
with COVID,
asset class.
or one asset class. Like we
That's
saw this with COVID, of course, when we were a lot of residential homes at the time. A lot of people were deferring rent, or if you were invested in a lot of small businesses, the small business class was being affected too, because small businesses weren't running as frequently or weren't running up to the speed that they were used to prior to COVID. So allowing us to be in different areas and diversifying our asset class really allowed us to collect revenue from all different areas and not being impacted by one particular area. So I think that was a huge bonus and a huge positive and pro for us.
Yeah, and thank you for bringing that up, Lon, because I absolutely, and I meant asset type, not asset class, my apologies, but we're going to talk about the geographic area a little bit in a second, because that's important. But back to this sort of, each asset type has its own real estate cycle. And so it just as you were both saying, it moves at different times. So for example, like commercial will operate a different way, and then multifamily residential does a different thing, and industrial is just pretty much like always hot. And not always, but there you go. So as a result, that ends up being a very good way to diversify and mitigate risk, because having cycles like this, if you're in one, you're going to feel it all. And it's just about having multi-purpose, multi-asset types, and that sort of makes it all sort of more, risk mitigated and stable. That sort of capture all that? Yeah. So I'd like to actually, back to what you were saying, Lon, is mentioning, and Shoaib, about that sort of the local markets that you're in and what you're looking for there. But I think something that I really heard when you were talking was the economies of scale and the relationships. And what I get from those two things is economies of scale of your vendors and your service providers and you name it, because you've got more properties in a certain area. So then you've got another great relationship that's developing. And then also on the acquisition side, because that's when you get pocket listings. You know the area, you know what's coming up, you know everybody who's who in the zoo. And so I'm sure there's opportunities that are being taken advantage of or leveraged in that case. Is that accurate, Shoaib?
Yeah, it's very accurate. It actually leads to my to a great example of our most recent acquisition, which was Owen Sound. It's a very big property in Owen Sound, Ontario. It's actually 12 industrial units, commercial units that were a part of the purchase. The way it came about was really just Carmen having such a large network and being in the industry for so long, and within that area where Carmen was made aware of this property. It was a private deal. It came to our attention. We did some due diligence on it. Then as we started to look into it, it ended up being such a great opportunity for us. So that is a clear example of just having your footprint in a specific area and what that does and what opportunities it allows. So it was a hidden gem that Carmen discovered for us and for District REIT, and it's a fantastic add to the portfolio.
That's awesome. And that's another pro tip. If you're taking notes, that's a good one, is getting to know everybody in your area, in your neighborhood, and who's doing what for your area of expertise, so that you can create those relationships so that they come to you and you know what's going on. So that's awesome, and way to go. Congratulations. I'm sure we'll hear more about that latest acquisition soon. Yeah. So very cool. I'm going to shift gears a little bit. No, I won't. I'm gonna stay. I'm gonna keep on this track. I was gonna throw a curveball. We're gonna come back to it. So then when you are looking at properties and in your acquisition strategies, what is it like the criteria that you're looking for? So you mentioned, I heard you say earlier, cash flow and income producing. What other aspects are you looking at?
Yeah, of course. So the biggest aspect is a big aspect of what we're looking at is the low hanging fruit. So what I mean by that is really understanding where we can get appreciation and value add out of the property. So sometimes a property that we're looking to add might be a fixer upper. It might be one that requires some renovations. It might be one that when we go in, we're going to be trying to increase the value by a couple $1 million by just the moment we go in there. And that's going to be added to the cost-based analysis when we're doing our due diligence, understanding how much is going to go in to generate the maximum output of revenue in a 5 years time or a 10-year time. So how are we going to be looking at this property 10 years from now? So when we're doing our property acquisition, along with all the other due diligence aspects of it, like doing environmental reviews, doing our cash yield analysis, doing the tenancy and occupancy rate of the property and the buildings. Is it fully occupied? Does that mean that we're not having to worry about the tenant class? But while we're looking at that, we're looking at all these different aspects so that we can understand how much can we grow this business? And if we're buying it today at a certain price, when we do our appraisals, which are done yearly on our properties, will that appraisal come back at a higher value the following year? Because that is a big element in our district REIT as an investment, which is the capital appreciation side of things.
That's interesting. And it's really important when you're doing your diligence on coming into a REIT or a fund or whatever have you, it's actually, you said a magic word. And that magic word is annual appraisals. So you want to be listening for making sure that REITs or trusts, so we're just going to talk REITs. So REITs are doing an annual, at minimum, an annual appraisal. And why that is so that you know that when you're, first of all, you know that they've got a business plan to increase that valuation, and that's excellent. And also to know where you are in terms of how much the valuation of your investment is also going up. Is that accurate?
Yeah, that's accurate. And actually one very important part that I would add to that is actually you also as an investor are looking for that appraisal because it's an element of transparency and trustworthiness that the issuer, the trustees are providing to their investors. It's one of the main reasons why Carmen really wants we want to be transparent, we want to be honest, we want to be completely trustworthy with our investments and our investors. They get a full transparency of how we're doing. They get quarterly reports, they'll get the yearly annual financial audited statements that are encompassing the appraisals and the appraisal amounts and how the value of the properties have increased or decreased, whatever the case is. So we want to be transparent, and that's a huge element of this, so that you feel like your money is in the hands of a trustworthy issuer and a trustworthy company. So that's one of the main reasons why the appraisals are also there and what you want to look out for if you're investing in a REIT.
Yes, it also sets the price. I'm going to come back to your reporting because I think that's really interesting, and it's a good indicator of what to look for. But it also, by doing that annual appraisal, it also, if I understand this correctly, and maybe Lon, you're the right person to help out here, but anyway, is that it also reevaluates, or it can be the sort of the benchmark by which to reevaluate for new investors coming in, so that they're not investing at the same rate as an original investor, that it's evaluated so that it's appropriately measured out, and that they're investing the right amount for the right valuation and not
Yeah,
getting more
there's
value.
so there's the concept of the net asset value, or the NAV. And so every year, as Shui mentioned, there has to be at a minimum third-party independent appraisals done on the assets. And so based upon that calculation, they subtract out any of the debt, any other obligations and liabilities. The remaining amount is the net equity. You divide that by the number of units outstanding, and that computes an estimated price per unit, or NAV price per unit. And so I believe REITs then will update their NAV price, or the unit price. And so if, let's say, on day one there was 10 assets, and then day 365 there's 20 assets, based upon the NAV calculation, either the unit price has gone up or gone down, depending on whether or not income has grown, the value has gone up. A whole myriad of factors are contemplated in that calculation of NAV. And so investors coming in on day one or day 365, there should be different potential NAV valuation prices. And so looking at the NAV history, the trend line, the track record is definitely a diligence metric that the investors should evaluate when they're reviewing a private REIT.
Very cool. Quick question on that. That's a great suggestion. Another pro tip. So in looking at that NAV history and if it's gone up or down, are there I guess it would depend if they've grown a lot in a particular year. So are there any like major red flags that one would need to look for? Like always going up would be green. Yes, we'd be happy about that. But is it okay for it to go down on occasion because it makes sense? Could you give us a little insight there?
Yeah, my view is with real estate pricing and market cycles, prices don't only go in one direction. So at some point you're going to see some volatility, especially in real estate and private real estate where it's illiquid. So when you're evaluating the decision to invest, you should always view it from a long-term point of view. It's very difficult to time the market. If you think in 30 days or in 6 months or in 18 months, it's a good time to come in or leave. It's a very difficult strategy, because if you had that crystal ball, then you'll do great for yourself. But most people, even the professionals, their strategy is the management team a good management team? Can they execute? And so much of the value creation in a portfolio of real estate is driven by the ability for the managers and the active management to manage the assets properly and make sure they reposition them or position them in a way where it's competitive to the local market, because there's going to be so many macroeconomic factors that impact the ability for an asset to perform. Where you balance it out is with experienced management teams. So yes, the NAV and the unit price track record is definitely good to look at, but historical returns aren't always indicative of future results. So you got to look at deeper analysis, the macroeconomic environment, the track record of the management team and whether or not they have a value add or an active management strategy. And so for me, it's look at the long-term view. You won't ever get the timing right, but if you can invest for the longer term, then that's when you could maximize your return by investing in real estate, potentially, of course. But the long-term view is the better way to view potential real estate investments.
Awesome. Thank you so much, Lon. I really appreciate that. That was very insightful. And for those of you who listened carefully, you also heard him say, Lon say, macroeconomics and the macro market analysis of what's going on in there is number one. Two, management, of course, and their expertise and whatnot. And then three, being able to make sure that they've got a value add strategy, if you will. I'm simplifying your words, but so that's that. The Real Estate Wealth Lab members, congratulations, you've already got number one, and now we're doing a little bit of number 2 and 3 right here for District REIT. So that's fantastic. Thank you. Actually, so speaking of value add, do you want to? We kind of talked a little bit about the tenants and things like that. But is there anything else you'd like to add about the value add on acquisitions and what you do to raise that value and improve cash flow and all those good things?
Yeah, of course. I think there's the one other thing area that I want to talk about is area of construction. So sometimes we do go into these properties, and if it makes sense, we can sever off pieces of land depending on the acquisition. Future construction, future development is a big part of this industry as well. So if we can develop certain areas, that we can always buy a certain piece of property, develop it, and then rent that out as well. So sometimes does that mean breaking down a certain room, making it more units in a property, whatever the case is, those are value adds that are also very crucial. And it helps increase the value. So it's definitely something that I think I forgot to mention earlier.
Right. Okay. So that's another level of strategy that is quite unique, actually. All right. So what are the key elements of diligence in your acquisition? We've mentioned a couple of things in terms of you like to look for income, but at the same time, you also look for opportunity. So let's get more into that sort of checklist of, okay, you're looking at an asset. It could be, as we've talked about, very diversified in terms of asset types. It could be industrial or commercial or retail or medical offices or other offices, I'm sure. And of course, multifamily residential. So probably others. So that's a big, huge gamut to be doing your diligence on. But tell us, what are you looking for?
Yeah, I mean, part of it is also looking at the tenant class, the type of people that we're renting out to. We're going to be doing our due diligence with our property acquisition team, where we have an occupancy rate of 89% in our rentals. So we want to make sure that the type of investor or the type of tenants that are occupying our units are ones that are going to stay. They're not going to give us any trouble. We're not in the business to try to kick people out and then flip it around and get more different tenants. Like, we don't want to deal with that. We want good tenants that are there. They're good. They're paying throughout their entire stay. We don't have to deal with issues. So a big chunk of this is doing that due diligence on the tenant class that's there. Other areas of diligence for looking at properties is understanding the environmental reviews, understanding a deep analysis of the leases, looking at 5-year plans and understanding what our analysis shows us if this is going to be a good value add for us or not for the portfolio.
Okay, so a lot of rigorous analysis goes on behind the scenes, huh?
Oh, definitely. I mean, you're not going to be able to grow District REIT without having to do that type of analysis, because you want to be stuck with a property that's going to be appreciating and not depreciating at the end of the day. So that's obviously the most important part.
Awesome. Very, very cool. All right, so let's flip the script here. I mean, we just talked about what diligence you do. So what diligence do you think that folks who would be investing in you and District REIT would do on you? So what diligence do you recommend for individuals when they're evaluating a REIT?
Of course. So I think the most important part is that the investor needs to be comfortable. So they need to be comfortable in the investment that they're partaking in, them understanding the kind of risks that are associated with the private industry versus the public industry, understanding the volatility of, for example, we were talking about the NAV and what the net asset value, the price is, understanding that there's some pros and cons to the fact that it doesn't fluctuate every day, right? It's not like a publicly traded company where you're seeing the ticker go up and down on a daily basis. So that's definitely, to some a pro.
Where
To
that
some,
just gives me heartburn. But anyways, okay, go ahead. This is why I love real
um,
estate.
of course. So you want to look at things like that. You want to look at what type of, if you're investing in a private industry, if you're understanding what a REIT is, understanding that you're investing in tangible assets. So when you're looking at us, you're understanding that the level of risk this entails and this type of investment is bringing to you as an investor. So when you're comfortable, and that's something that Lon and the Fund Scraper team, which is an exempt market dealer, they're going to talk to the investor in detail heavily about if this is a suitable investment for them. That is a huge part of the due diligence aspect that an investor will do on us as a company, where they're understanding the risk that goes with it. Now, another aspect of understanding the risks and the due diligence behind it is you might be an investor that doesn't want to be a landlord anymore. Maybe you've done the whole landlord gig before, and at this point you are looking at us. We're going to do all the heavy lifting. We'll do the property management. We'll be the superintendent. We'll get the right tenants for you. So we'll do all that. So you're looking at us as, okay, I can just provide my money, take my returns, get my passive income, and that's it. I don't need to worry about it. I have my hands tied and I'm good. So I think that is the type of due diligence that is needed for an investor to look into it, alongside of the transparency that we discussed earlier, making sure that we're transparent, we're providing transparency throughout the year. So you have the quarterly reports, you understand where we're progressing, what we're targeting in terms of targeted properties, you understand where we're going to be in the next year, what we project for ourselves. That's important because if I was invested in something, I want to know, is my money in good hands? Where is it going to be going 5 years from now? So when you're doing that due diligence, it ultimately all ties together with who are you in business with? And Carmen and Richard, going back to what we discussed right in the beginning of this whole thing, they've been here for 25 plus years with experience individually, both of them. So they understand how to run this business. They understand where to invest in and how to grow this business. So when you're ultimately investing with District Property Trust, you're investing with their experience as well. They're invested themselves in the company. So that's a huge element of it.
Yes, right there. Skin in the game. Tell me about that.
Yeah, so Carmen and Richard have been invested since the beginning, and every year and throughout the year, actually, I find Carmen letting us know that she wants to invest more and she wants to put more money in. And I think that that's so great for investors to hear, because they have skin in the game, like you said. They would be privy to any bad decisions that District REIT would make. So we always want to make the best decision for investors. And I think that that's a huge advantage when an investor would be looking at doing due diligence on District REIT.
I like what you said earlier about talking about Carmen and Richard and their expertise and experience and things like that, and how you introduced, how they started this and the belief and the way of helping people behind it. And I guess that's something that maybe we don't talk a lot about when we're considering doing diligence on the REITs that we're investing in, but it's important to do business with people you like, in addition to people that you trust. So trusting and liking, same. Let's not like people we don't trust, but there you go. well, you can like them, but just be mindful. And so I think it's important to maybe have that, start developing those relationships and get to know Lon and get to know Shoaib and get to know Carmen and Richard and things like that. Get to know the REWL team so that you're doing business with individuals that you like and trust. So I just wanted, that kind of resonated for me. So
Yeah, of course. And I think you touched on such a great point. Obviously, COVID sort of dampened it a little bit, but Carmen's so big on investor interactions with our clients and getting to know our investors. So we would actually often hold events at our office, or if you are familiar with the GTA, then you would be open to coming in. We would send out open invites, and hopefully we're hoping to start that again and getting some of the investors with client facing events where we can see them in person, see them live, and have them host them here at our office or at a conference room, whatever the case is. But we were very big on that. Carmen's very big on that. And like you said, I think it's such an important element of it all, just to really know who you're investing with and who your money's with at the end of the day.
right on. Okay, well, we're gonna be just a couple more questions before we wrap this up, for a couple of questions at the end here. What you already touched on what problems you solve, really. Not being a landlord. I just wanted, that's a big one, not having to be a landlord. And also you didn't necessarily say it, but you did, with expertise, kind of being able to leverage someone else's expertise, as we've already talked about. So what I want to quickly do is bring everyone into a different kind of conversation of do it yourself, don't do it yourself. So if you're just starting out, being a landlord is a long journey. It can be a hard journey, and you got to get to know everything. And we've got a rule book for that on how to get started in real estate. So that's always important, the step-by-step, and it's absolutely doable. And we've got coaches and advisors. And there's other ways that are nice and easy to get started and get that money working for you also while you learn. So that's something to consider. And then if you're at the end of your life cycle in terms of tired, so tired of real estate in terms of being that landlord and the hands-on, this is a great option of staying in there and in the game, but leveraging some young whippersnappers out there with all the energy who can do all the work for you. How's that? So there you go. And I just, I know I'm mindful of time, so I just want to make sure that we get to it, Lon and Shoaib, in terms of a little bit of your competitive advantage, and then how individuals can invest. What does it take? So a little bit about your competitive advantage, which we've sort of touched on, but you can wrap it up in a soundbite or two, and then we'll get into directly, and this will be more for you, Lon, of some of the terms and the exits and things like that.
Yeah, of course. I think the biggest competitive advantage is that vertical integration that was mentioned earlier. Just allowing ourselves to be able to do a lot of what it takes to run a REIT in-house, and on top of it, having that experience with Carmen and Richard, where we can go out in the industry and get everything done very quickly. We can acquire properties very quickly with the level of expertise and our outreach in the industry. So having that versus our competitors that are relying on other vendors that may need to get a property acquisition team. They're paying out more in expenses for these type of services. We are able to do a lot of this in-house, and I think that that's a huge advantage for us. But I think ultimately it comes down to with all the affiliated companies and the one real estate enterprise that we have here, we can always leverage these businesses to understand what is the most economical and efficient way to go about and making decisions and running a business here for District Property Trust.
Awesome. Very good. That's very succinct. So Lon, how about you tell us some of the nitty gritty?
Sure. So anytime anyone wants to evaluate the offering, there's going to be the offering memorandum. So we highly recommend all investors with their professional advisors or any other professional advisors review what's called the offering memorandum. In the offering memorandum, there will be the major terms and conditions of the investment, what their investment strategy is, has all the fine print, as well as the key risk factors. And so definitely review all the potential, all the legal documents. Once you have had a chance to review the offering documents, you're going to see key summaries. And to summarize the key terms with respect to district property trust, the hold period is 6 months. So if you propose and then you move forward with making an investment, you have to stay in the investment for at least 6 months. Otherwise, if you request to redeem or want to sell back your units to the issuer, there will be some penalties if you exit too soon, because obviously there's a lot of work that everyone does to process you, get you evaluate your investment profile, get you into the investment. If you're not able to be there for the medium to long term, then perhaps evaluate another investment opportunity. With the unique distinction of district REIT, they have a relatively short redemption restriction period, which is the 6 months. After the 6
I know,
months,
like my eyes are going like way wide here, everyone. Like pay attention, because 6 months is very, very short by industry standards from what I have seen out there. So that's a huge competitive advantage. Not that you're, again, what Lon was saying is like, you don't want to be going in this for the short term. It's not really the ideal situation for these types of investments. However, it is a very, to me, that speaks of a belief in one's product.
Yeah, it reflects on the confidence of the trustees and the management team that if your circumstances change, then of course they will allow you to redeem and you can request for the redemption. Obviously, there are certain caveats to how the redemption process happens and how it's accepted. So that also will be in the offering memorandum. Another key attribute is the potential for the distribution reinvestment plan. So they call it the DRIP plan. So people who want to invest and don't really need to extract the distribution income, you have the option to reinvest the distributions, and they provide a 2% bonus for those who choose to reinvest the distributions. So let's say, by way of example, if you purchase one unit for, let's say, $10, by the end of the 12 months, you would have expected to receive about 80 cents in distributions. If you opted into the DRIP program, they would have automatically reinvested that 80 cents to purchase additional units. And on top of that 80 cents, you would have had 2% bonus on that 80 cents. So you get a little bit extra units to have that compounding effect. So there's the DRIP plan
that's very generous.
To investors.
It's a very generous DRIP plan, my understanding.
Yeah, and it works out for those who don't really need to extract the cash and spend it. They want to be able to compound the returns. Then the DRIP is something that potentially allows you to compound returns. So DRIP, the redemption term of 6 months, as well as monthly distributions. The trustees have always made it their plan to pay distributions on a monthly basis. So their target distribution yield is 8%. That's payable monthly. So whatever you're planning to invest, if you want to forecast out what your potential returns are going to be, there's a cash component, and then there's a long-term capital appreciation component. Just the cash component, which is what we call the distribution yield, that's the 8% projected. By the end of the year, you should be expected to receive the 8% in cash, but divide that by 12, and that would be your expected monthly cash distribution. So when you look at the overall returns of projected 11 to 13%, and I emphasize projected because there's no guarantees on returns. And so 11 to 13% is the projected return, assuming you hold it for the medium to long term, so 3 to 5 years at least. 8% of that return is going to be cash distribution. The other 3 to 5% projected return is going to be in potential capital appreciation. So that's only monetized when you redeem or sell your units. So the capital appreciation is the potential increase in the value of your unit or your shares that you hold.
That's awesome. So you get potentially something along the way, and whether you drip it or not, you are getting something along the way, and later on the valuation through the appreciation that you're getting some benefits there.
And then the offering is eligible for registered funds. So your TFSAs, your tax-free savings account, your RRSPs, RESPs, RIF accounts, LIF accounts. And so in order to invest from your registered account, you have to set up an account with one of the trustees, which is, let's say, Olympia Trust. That's one of the major trust companies in Canada. You'd have to set up a TFSA account or RSP account at Olympia Trust to then invest from your registered accounts at that financial institution. You can't go to your RBC or your TD trading account from your TFSA Invest. You have to set up another TFSA account or RSP account at another financial institution, just because it's the private exempt space. Not all trustees or trust companies service the private exempt space. So
don't let that feel complicated. It's not, and everybody walks everybody through it. It's super easy, but just remember when you go to your bank and it says, oh, I've got registered funds, and if they're just sitting there and they're not doing anything, it doesn't mean that you're actually making money. That's like one of the biggest misnomers about registered funds, is that people say, well, I've got a TFSA account. No, actually, you just have money sitting in an account that's not doing anything. You actually have to put it in to do something. So this is just one of those other things that institutions that allows you to take your money and put it into something like this.
Yeah. So I think those are the key major terms. But of course, review the subscription agreement. That's something that's the investment documents that you have to review and sign in order to show your commitment or your intention to subscribe. Prior to that, you have to review the offering memorandum document, which is a longer legal document that outlines all the risk factors, the investment strategy, things like that. And then obviously reach out to any of us here to answer any questions you may have about the offering, the legal documents, who qualifies for how much. We're all here, as Jennifer mentioned, to walk you through that process and ensure you're making an informed decision when you choose to move forward.
Awesome. Well, thank you, Lon. And one more thing, that was a minimum of, just repeat the amount, minimum.
Oh, sorry. Yeah. The minimum investment amount is $10,000. However, for subsequent investments for existing investors, the minimum goes to $5,000.
Okay. So once you're in, you can actually put in smaller increments along the way.
That's
down to 5,000. Great. That's awesome. Thank you. All right. Well, we're going to bring this to a close. Shoaib, if you have any last words or anything that you'd like to share about your district property trust.
The only thing I would say is that when you guys mentioned the 6-month mark, it truly is the case that most people, when they come in, I don't see many people leaving in that 6 months, because they love the product, and it really is a testament to what we've established here and the business that we're running. So I think District REIT is only going to grow that much bigger and faster, and we're going to hope that sky's the limit for this one.
That's awesome. And thank you both. I wish you all the best, and we will be in touch. I know for sure, because Carmen and I go way back. So that's awesome. So thank you very much for your time today. And we are going to bring Ken on up in probably just a minute. He's going to remind members what REWL is all about, and also showcase, for those of you who are not members, come out and join the Real Estate Wealth Lab, because we have lots to offer, including showcasing some amazing individuals like Shoaib and Lon in our Market Leaders Lab today. So thank you again.
Thank you for having us.
Thank you very much. I really appreciate being here.
Awesome job, everybody. Really great. Excellent. Can everybody hear me okay? Excellent,
Yes.
excellent, good song.
Just
What a
get the
presentation.
spotlight on you.
Oh, thank you.
Hi, Ken. Woo!
Come
All
on.
right, everyone, this is Ken. He's our Chief Operations Officer, and he's going to tell us about the Real Estate Wealth Lab. So glad that you're here, and I'll let you have the whole spotlight to yourself, my friend.
All right, excellent.
Well,
Well, guys,
handing over the remote control.
yeah, absolutely, 100%. Well, everybody, thank you for having me. I'm not going to take up too much of your time. For members that are with us, thank you very much for being members. We are here to grow our membership. So my intention today is to kind of show you our REWL toolkit, which a lot of you that are members currently have it. So for new folks that are just learning about the Real Estate Wealth Lab, this is for you. So stick around, and I'll only take about 4 to 5 minutes of your time. I'm just going to touch on what we got and the special promos that we're offering everybody. So I'm going to share my screen. Just Jen, if you can give me a thumbs up when you're able to see it, that'll be fantastic. Everybody see my screen? We're good to go. Okay, fantastic. So guys, I'm just going to cover the Real Estate Wealth Labs Investor Toolkit that we have for a lot of beginners. So again, under 5 minutes, I'm going to get you in and out of here. All right, is it changing? There we go. So you're likely one of three people. You're either an experienced investor, you're you're stuck, you're not sure what to do or what your options are. You're either a beginner where you don't know where to start or what to follow or what information to actually listen to. So you're likely there, or you're next level. You're looking for deals, you're looking for strategies, you're looking for ways to expand or scale your portfolio. So that's what we're here at the Real Estate Wealth Lab to do. And I'm going to dive into just a little bit of how we do that. I'm going to show you some samples of what we got in our toolkit. So research, number one, you got to understand when to buy and sell. Jen's research reports that we put together are phenomenal. I use them personally as a realtor. I use them with my clients. These things actually help you know when to buy, when to sell, when to hold specific markets. Jen covers a number of markets in the US and Canada, helps me feel better knowing what's going on in my target market, and then when's the best time to buy, sell, or hold. So that's one of the ways we do things. What we're going to do is send you that every week. I mean, I don't want to spend 30 minutes reading a bunch of articles when someone's doing that stuff for me. As an analyst, this is what we're good at. So what we're going to do is send you a summary of these articles, the headlines, the major headlines in the marketplace, and we're going to summarize them for you. Then we're going to tell you what it means for an investor as your portfolio. So, stay up to date, get the latest insights from Jen and the team on market movements and how it impacts your real estate investment strategy. Understand what's going on without having to spend hours researching it yourself. I mean, I keep my finger on the pulse of the market, and helps me make informed decisions as a real estate investor. So something I hope that you guys can do too. One thing I love about it, it actually frees up time for me to do more important things with my family and life, because I'm not spending so much time doing the research and trying to understand what it all means when it's all done for me. So far, so good. Everybody good? Thumbs up. Awesome. Good stuff. Guys, spreadsheets. Stop using spreadsheets. If you're feeling overwhelmed, look at the numbers, your head starts to hurt. I know mine does when I do it. We've got those covered. I mean, stop buying and selling using emotions. Use actual concrete numbers, and we've got calculators inside there to help you do that. So let the calculators do the crunching for you. They also provide nice looking reports so that you can look at them later, or even if you're working with a joint venture partner or trying to raise some capital, you can present those reports to other parties in a clean, simple way. And if you like things done in order, like I do, you like things done step by step in sequence, we've got that in there as well. So we've got a playbook in there that has sequential assessments, calculators, guides. It all helps you, figure out what to do next in your journey. So the way I see it is like having a digital real estate advisor in your pocket at your fingertips. They're guiding you along the way on what's next. There's over 20 plus years of experience here bundled together in this little platform in the palm of your hand. I got to ask, what's that worth to you? What's that knowledge and experience worth to you? Unique opportunities in our property shop. We have an actual Kijiji or Craigslist style real estate platform for members by members. So get access to unique and sometimes one of a kind investment opportunities right online. They're provided by experienced investors and knowledgeable investors. So save some time and get started quicker without actually having to go through tons of individual listings to see if they work, like most of us do. And then we've included our real estate starters guide. This is a quick start guide. Like, one of the biggest problems a lot of beginners lack is confidence. Like, what am I doing this right? Follow a guide. I mean, this thing will change all of that. It walks you through every step necessary so you can feel comfortable with the decisions that you're making on your first investment or even your next one. It's a 220-page guide, 35-page workbook that actually has a lot of information, whether you're buying, fixing, flipping, and other different strategies that you could use as well. So you're getting access to that as well. Now, again, this toolkit, I believe, is great for beginners, experienced, or even next level investors. We valued it around $2,000 a month access. You're getting tons of bumps, scratches, bruises that we've had in here so that you can avoid that. So, I mean, I think that's a tremendous amount of value, knowledge, experience, over 20 years of Jen's experience, my experience, and Rand's experience, all of our collective knowledge is in here, and we really want to see you succeed with this. So we want to do something crazy and give you some access to some pretty good material and tools that you can use, i.e. why we're calling it the Real Estate Investors Toolkit. And it's $9 a month. So I don't know if we can do any better than that, but that's it. That's what I'm asking. Get access today. There's the link to get access, realestatewealthlab.com/get/access, and join the team, grow our family, and we want to see you do well with this. So guys, have access to our stuff, grow your portfolios, use the tools in there to help you do that. Good. Did I meet my time? Jen, we're good?
Yes, I think I need to clarify though for the members on here. I just want to be clear that this is the what do you want to call it? The research and the news and the products and things like this. But this $9 does not include the actual member, like the masterminds.
Correct. It does not. Our community part is still, and the coaching that we have. So we do have other programs. I'm just trying to get people started with the toolkits to understand what's in there, the power of what's in there. I need you guys to explore it. I want you guys to explore it. And that's like I said, that's my intention. To the power that's in. There's a few individuals, members on this call that are probably still with us here that can speak to some of the tools that we've shown them. And we just want people to get access to them, start using them to see how powerful they are, because there's a wealth of information in there. You know, we do have other programs that we have, coaching where we walk you through everything. And then we have our community lab, of course, which is more about community, and our masterminds, a little more expensive on the membership side. But I'm trying to really just stress everybody that's new here is, learn real estate investing for as little as $9 a month. We've got everything.
$9 seems like a steal. That's amazing. Very cool. Thanks, Ken.
Absolutely. Absolutely. All right. So Jen, did you want to close off the call?
I guess so.
Okay.
Let's see. I think that's kind of the end of today. So I guess the key thing, we didn't have a lot of time for Q&A. I apologize for that. But nobody was typing in the chat there, for very few. So, and all the questions in there got answered. So I guess the key thing is that we're going to be same time, same place next Wednesday. We're in our masterminds next Wednesday doing our work. So have your action items done. And it's always a delight to have you. And again, Shoaib, thank you very much for being here. Special guest today from the District Property Trust, District REIT. Very grateful for your time.
Thank you, everyone. Really appreciate it.
Thank you. Thanks, everyone. See you soon.
Bye, everybody. Have a great night or day.